Why has the Fed stayed silent for weeks? Why haven't interest rates dropped yet? Why are investors so nervous right now? The markets are shaking, data is confusing, and uncertainty is everywhere. But here's the real question. Why are some investors still making bold moves in this chaos? Why are they taking risks when they should be afraid? Today, we'll look for answers not just in economics, but in the human brain. Because financial decisions are not just about numbers. They're about psychology, emotions, and paradoxes. And by the end of this video, you'll understand one key truth. The Fed's silence might reflect a storm happening inside investors' minds. The U.S. Central Bank, the Fed, has been silent for weeks. Will they cut interest rates? Will they keep them high? No one knows. But everyone knows this. That decision will affect more than interest rates. It will impact stocks, crypto, real estate, and even the global investment mindset. Inflation is still high. Wars are making things more unstable. Supply chains haven't fully recovered. The ground is shaky. But how are investors making decisions in this environment? This is where uncertainty anxiety comes in. The human brain doesn't like things it can't predict. Uncertainty causes stress. To escape it, people either take big risks or do nothing at all. And right now, we're watching a live example of behavioral finance in action. The expectation management paradox. The Fed hasn't done anything yet, but investors are already reacting as if it has. That sounds like a contradiction, but it's actually a strategy. Markets don't move on facts, they move on expectations. So most investors right now are not thinking about the real economy. They're thinking about what other investors might do. This is what we call in finance, pricing in the expectation. Running from risk or chasing hope. Some are moving their money to safe places. Some see chaos as a chance to win, because the human brain swings between risk and hope. One single message from the Fed could swing that balance completely. Today, we saw that. Uncertainty is not just an economic word. It's a fear, a hope, and a confusing feeling inside people's minds. The Fed's silence might be a smart plan, but its biggest impact is not on numbers. It's on human psychology. Because financial choices are not always made with logic. They are shaped by belief, emotion, and the brain's defense systems. That's why finance is not always logical, but it's always loyal to human nature. Thanks for watching. If you like this kind of analysis, don't forget to like, subscribe, and share your thoughts in the comments below.